On this November update, we're going to dive into the Federal Reserve and interest rates, the 10-year Treasury yield, inflation, retail sales, and more. In November, the Federal Reserve had a pretty important meeting deciding on what to do with interest rates. As to no surprise, but it was big news, they decided to hold off on increasing rates. Coming off of an October high of the 10-year Treasury, we saw Treasury yields start to decline. As we saw the October inflation numbers come in, we are still averaging an annual rate of 3.2%. While the Fed has been hawkish with their interest rate increases, we have seen inflation start to ease. They have a ways to go until they get to their 2% target. So we will see what is in store for 2024, but they may not have to raise rates again. The retail sales numbers also came in. We declined on a month-to-month basis. However, retail sales were still up year over year. The ever-important end-of-the-year retail sales from Black Friday have yet to come in, but we'll be closely watching those numbers to see how consumers behaved during this holiday season. Another important data point that we saw in November were wholesale prices, and those were also declining, which is important news on the inflation front. Economically speaking, we saw unemployment numbers rise to a 2-year high, coming in at 3.9%. That's big when it comes to the economy and inflation, as we see consumers start to pull back on their spending as that unemployment number starts to climb. On a week-to-week basis, we saw mortgage rates start to decline and applications for mortgages increase. We will see how this affects the housing market, which has cooled off in 2023. In reviewing all of these data points, we saw a 4-week market rally where every major U.S. market indice saw increases on a weekly basis during the month. For the latest on market trends and economic news, make sure you're subscribed to our channel and check out our Financial Foundations Based Wealth Management podcast.